Before you start panicking about all the new taxes coming in 2026, let me show you what you will not be taxed under the new Nigerian Tax Act, right? So some of these will surprise you. I know I've mentioned some of them, but they were not really in details. So I will break them down, the income, the benefit, transactions that are completely exempt from the Nigeria update framework. Okay, now let's go into it. So before I really say anything, please, if there's anyone I did not mention and we are learning, okay? So just drop it in the comment section so that I can also learn from you. We can learn together. Now, number one is deductible and reliefs. They are not taxed. You know the deductible I talked about. Anything classified as an allowable deduction or relief in the act is automatically, reduces your taxable income. And that's something like NHF, the insurance, direct relief, and all the thing like mortgage interest. Yes, you are not going to be taxed on that again. Okay, now money entering your bank account is not automatically taxed. Yes, it is not automatically taxed. Your bank inflow does not automatically become taxed. However, you are actually legally required to do self-assessment, self-declare your income, pay your tax based on taxable earnings. So if you have not watched the video on how to calculate your personal income tax, please go and do that. So it's not on every transfer that enters your bank that you're going to pay tax on. No. Another one is money gifts, inheritance, and upkeep. Take for instance, you send money to your grandma in the village. Of course, she's not going to be paying tax. Or you send money to your daughter, your son in school. They are not going to be paying tax. Do you understand? Because it is a gift. So it is not earned. It is not an income. Okay, it is not like they worked for it and you pay them. So these are not taxable. If someone sends you money, gifts, financial support, upkeep, inheritance, it is not considered taxable income. All right. And the next one I will be talking about is interest on long-term federal government bonds, right? So any interest you earn from long-term federal government bond is exempt from tax. So that this actually encourage people to invest long term. Another one I'll be talking about is capital gain tax, right? The shares, no CGT. The no CGT on the sales of shares if your proceeds are actually below 150 million in a year and your gain is below 10 million naira. So if you exceed this amount, right, the only way you can do is to reinvest the money. So instead of withdrawing all this old money, you reinvest the money, then you keep the transaction under the threshold that you won't be paying tax on, right? They actually encourage reinvestment of money. So that is why you're not going to be paying tax if you are within that range. Now, any previous losses on crypto and then you now later have profits, your previous losses will also be considered. You are not going to be taxed on that. This is for our crypto bros and sisters. Small companies like turnover of if you are doing below 100 million naira, so company earnings 100 million or less annually, do not pay company income tax. You're not going to be paying company income tax. So this is to support micro and small businesses, right? Again, I think the focus is really on large scales, not on somebody doing less than 100 man. That is why you see a lot of people trying to upgrade, right? Adapt from trying to upgrade from business name to limited. Another sector that is not going to be taxed is agricultural sector. They are actually exempted, fully exempted from VAT. I mean permanent VAT exemption. They are not going to be paying VAT. That is because to encourage more people coming into agriculture. Then also they will have 5 years of CIT holidays. So 5 years, or they're going to have they're not going to be paying CIT, that's company income tax, for about 5 years. That's actually a good opportunity. So, but VAT permanently, there's a difference between VAT and CIT. I believe you know the difference by now. So next is foreign dividend through approved channels. So dividend from foreign investments are not taxed if you repatriate the money back to Nigeria through recognized financial channels, right? You're not trying to do backyard method. Right? So you're not going to be paying tax on that because it is believed that you've already paid what is it called, tax from the company you earn that income from. So you're not going to be paying tax. If you sell your private residence, right, you do not pay capital gain tax. So your residential home is actually exempt. Again, emphasis on personal, I mean your own house. You're not going to pay tax. So if there's also a severance benefit up to, I think, 50 million naira, you're not going to pay tax. That is if you are probably laid off from work or something like that, and they pay you some amount, even your pension. I've talked about pension before. It is considered a compensation for the job loss or for your retirement. You've really worked during your active years, so you're not going to be taxed. I've also talked about pension and retirement benefit, right? Any pension payout, retirement benefit remain fully tax exempt, right? Your pension is protected. So instead of paying more, try to find a way to reduce your tax liability by doing pension. Military employees, members of the armed forces and certain paramilitary units, right, enjoy specific tax exemption under the Nigerian law. All right, so I think these are some of the things. So if there's anyone I didn't mention, please drop it in the comment section. Let's go through it together. But again, do self-assessment. Don't let the tax man come for you. And when you are saying this is a gift, let it truly be a gift. Have your receipt in this 2026 you're about to enter. I pray God will help all of us about 2026, 2026, 2026. I'll see you. Bye.